Hello, welcome to this week's Investment Trends, where we discuss the latest news in the stock market and the economy. So we had a short trading week this week due to the Labor Day holiday. However, it has been a rocky road for stocks. So for the S&P 500, we are seeing a decline of around 3.6%, which would be the worst week of the year for that stock market index. Also, the NASDAQ right now is on schedule to be down about 5.1% on the week, and the Dow Jones is down slightly. So on Friday, we had a weaker than expected jobs report come out. It was off by about 20,000 jobs to be reported. The unemployment rate stayed at about 4.2%, which came in right at expectations. So what does this weaker job report mean? Many people believe that this solidifies an interest rate cut coming in September by the Federal Reserve. However, some people are saying we may see as large of a 50 basis point cut. However, the expectation is a 25 basis point cut in September, but it's something to keep an eye on if they do think that the labor market has begun to cool off. The NASDAQ, as I mentioned, projected to be down about 5.1% this week, and we've seen a rotation out of some of the high-flying names, mainly around the chips and semiconductor industry. So Broadcom is forecasting a weaker fourth quarter for sales, and they saw their stock down as much as 9%. Other tech names such as AMD and Nvidia saw around a 2% decline on Friday. Amazon, Google was down around 1%. So although we see a little bit of a pullback in those names this week, don't expect anything to be lasting too long with those technology names. Just a little bit of a pullback, which is normal, especially around this time of year as we head into September of an election year. So what can we look to and what can we look to expect for next week and even a couple of weeks ahead? So obviously everyone's going to be in anticipation of the Federal Reserve meeting, which takes place on September 17th and September 18th. A couple of things to note beforehand would be the inflation readings and what that may impact, what that may have on their decision for how much or how steep of an interest rate cut we will see from the Fed. So for those of you that are investing, keep an eye on your money market rates of return, the Treasury yields as well. The 3-month Treasuries are currently yielding the highest. You can still get a little over 5% in those. So keep an eye on that money. If you had it in safe buckets of money, now could be a time to rotate into some of those technology names if you missed out on some of the rallies prior. So that's all I've got for this week. Leave a comment below if you're looking at any stocks or any other investing topics.